Hi friends, this is Peter from Tech Analyst. Today again I come with a new video on how to become a successful in day trading. A lot of calls I used to get from outside saying that they are making loss in the day trading, that is intraday trading. Listening to all those people's stories, I thought to make a video and build in a principle so that intraday trader can make profit in this market. The rules to be followed in intraday, without following those who are not able to follow these rules, they should not trade in this day trading or intraday trading. I have a lot of rules. Today I'm going to share only 5 rules. What is intraday trading? Intraday trading is a quite obvious a high risk game. Unlike what a lot of people believe, intraday trading is not about the right idea and the right trade, because they lose money in intraday and they cannot make profit in intraday. Whatever they earn morning, they lose everything in by evening. It's a lot more about how you manage your risk and stick to your trading discipline. Simple mistakes that intraday traders commit includes averaging their position, trying to outsmart the market, over trading to recover losses, focusing too much on hot tips. Interestingly, 90% of the intraday traders are losing money in intraday trade. Here I have built a 5 principle, a rule to become successful in intraday. As I told you, lot of rules are there, but I cannot put in one video. So maybe I'll produce part 2. In that I will share all the rules so that it will help you in intraday trading. Before starting the video, I request all my dear friends, those who are new to this channel and those who are already watching my videos, those who are not subscribed, please take some time to subscribe this channel. Just below this video you will find a subscribe button. Also hit on a bell icon. Do not forget to like this video and share it to your trading friends so that they also gain the knowledge from this video and they become a successful in day trading and they can make a money in the market. And also it will motivate me to make a videos, a lot of good content videos to you all. So directly we'll go to a video now. Learn chart trading. The point number 1 is, the principle 1 is, to become a successful in day trading, learn chart reading and understand the trade structure well enough. What is chart reading? What is trade structure? Chart reading is price chart and price patterns, technical analysis. Those who do not know chart trading, they should not trade for intraday, because what type of pattern is getting formed, next what would be the market movement, where is the support, where is the resistance of the stock, what is the historical support and resistance the stock is taking often and getting reversed from the point. So without knowing all those things you cannot trade but in particular stocks. And what is this structure? The success of the trade depends on the variety of factors. You need to understand the history of the stocks, its price trajectory, where that price goes, where it takes supports, where it takes resistance, where it get often rejected, getting rejected. So all this trajectory, price trajectory, you should know of particular stocks. News and corporate announcement of the stocks, support and resistance in the price chart. When all these things are put together, you get a structure of the stocks and you can foresee the price movement, where the price will go, where the price will fall. That we call a 360-degree view and particular stocks or indices. And we need to limit yourself to a handful of stocks for intraday trading. You should not pick a lot of stocks, 50, 100, 200 stocks and trade on that. You should pick a handful of stocks, like 5 stocks, 10 stocks, not more than that. Master in that stocks. Try to practice on that stocks, where it often get rejected, where it often go and come back. All this structure you should understand on the particular stock. That will make you success in intraday. Not only stocks, I'm talking about indices also. So you will become a master on that stock. So you can earn money from that particular stocks. This is the rule number 1. And what is the rule number 2? Control your emotion like greed, fear, hope. This is the most dangerous enemy of intraday trader. If you cannot control your emotion, you should not trade in intraday. You should trade like robo. Robo doesn't have any emotions. If you cannot, please, you think this is not my cup of tea. Come out from there. And where is your strength? Look for that strength and work on that strength, particular that area. So example, I'll give some example in this. I'll take hope. What will hope do? It will make your loss grow. One of the defining characteristics of successful trader is their ability to take a small loss quickly if a trade is not working out and move on to the next trade idea. Something is not working out. When you are into a trade, you see you are wrong, please exit immediately and wait for some time, think for some time, leave everything and think for some time. See the chart. If chart is very clearly visible, trade for the day. If chart is confusing you, then lot more trader also getting confused on that area. So they will definitely not trade. Only the retail trader will trade and lose the money. If there is a clarity in the chart, then go for a trade. That is why Jesse Livermore said, every day is not in a trading day. What unsuccessful trader does, on the other hand, the emotion traders, they become paralyzed if the trade goes against them. Rather than taking quick action to cap a loss, they may hold a losing position in the hope that the trade will eventually work out. A losing trade can tie up trading capital of a for a long time and may result in mounting losses and severe duplication of capital. So what the hope may do, it will give you hope because earlier a trade might have gone in your favor after making giving a loss, and it might given in your favor and you made profit in that. Every time market will not give like that. So when it is going down, you will not cut your loss. You are hoping that market will bounce back. Again market will go down. You will still hope that market will come up. It will go down further. You will hope. You will sit on the hope. It will never come, and you will end up with a huge loss. This is what the emotions make people to lose money. So do not sit with the hope. How to control this emotion, maybe coming points I will explain you how to control these emotions. If you control this emotion, you can become a successful. Now we'll go to a third point, third rule. To become a successful in day trading, build a rule or system and be disciplined. What do you mean by building a rule and system? I'll give one example. I'm a day trader. If I trade only in breakout, my trade should be in only breakout. I should not look for other things. Normally, I do trading in symmetrical triangle breakout. Lot of patterns are there, but in that I am giving example in the symmetrical triangle pattern. When I see a breakout on the symmetrical triangle pattern, I take trade and I place a stop loss. I have a vision of target also. You should build a system. Your trade is only a breakout trade. If you are a support resistance trader, you should trade only on the support resistance. Don't look for other things. So these types of system you need to build in your trading system. Example, I'll give one that Bruce Lee has said. A people who practice a 10,000 kick per day, I don't afraid of them. But I afraid of people those who practice one kick 10,000 times. That means, but person who practice one kick for a 10,000 time, he's a master on that. He know how to hit, how to defeat the people on that kick. So same rule you need to build in the trading system. You need to practice one breakout. If you are a breakout trader, you need to practice a breakout trade. If you are losing on that, you need to find a root cause. You do an analysis. Why did I fail in this trade? What is the reason? You do an analysis and you will find a answer. So next time don't do that mistake. So you will become a success on that particular rule and system. So that is what it says, build in a rule and system. Be disciplined. What do you mean by discipline? As I told you, control your emotions. Discipline mean that you need to have a trade with stop loss and target. Without stop loss, without target, a day trader should not trade in the market. They will think that they are keeping a stop loss in their mind. It will remain in the mind only. It will not come in the system. Because when market is declining, coming down, the hope will come in. Another will see another 2 rupees. Will see another 10 rupees. Will see another 10 rupees. Keep going. He'll continuously see 10 rupees coming, falling down only. But he will never book a loss. He became a paralyzed there, as I told you in the beginning. The loser will become paralyzed, and they cannot know how to come out from the trade because it is showing a huge loss. He will not book the loss, hoping that market will come up, and he'll end up with a huge loss. You need to build a discipline that your stop loss is this, your target is this. If stop loss hits, you will come out from the market, you will never trade again. If target is hit for the day, you will come out from the market, you will never trade again because your target is hit. If you keep watching the chart will pull you back again into the system, and again you will place a trade. It will take away your profit and your capital also. So close the system and do some analysis, do some studies, learn technical analysis, learn chart trading, learn price action, price pattern, read books, make your knowledge grow. This discipline you need to follow in the day trading. If you follow this discipline, you will become successful. Now, next point, the rule number 4. You should not try to do a rapid loss recovery. What do you mean by rapid loss recovery? When you are positioned into a loss, you should not try to recover the loss. You should never fight back to recover the loss. You cannot fight with the market. Loss is a part of your trading career. Without loss, nobody can learn anything in the market. If you made a loss, you will try to learn something. If you don't make a loss, then I'll tell you, you will become unsuccessful trader. So learn to book a loss quickly. Do not run behind to cover the loss. This is one of the major thing all the traders make a mistake. When they are into a loss, they try to recover that loss. They become very aggressive to recover that loss. When you are into loss, what happens? Your emotions start working inside. Your emotion, that is fear, will start working. You what we will do when you are into loss? You will try to have your position little bigger to recover the losses, because earlier you took one lot. Now to recover the loss, you will put two lots, 3 lot, 4 lot, 5 lot, or 500, 600 quantity, because you can cover quickly. You will think at least if it goes 3 rupees, 4 rupees, if I put 10,000 quantity, immediately 5,000 rupees will come. You will square up the position. You will think that, and you will put higher lot. Dear friends, all this thing what I am teaching you is my experience too. I have come across all those things, so I can easily teach you. So do not put higher lot to recover the losses. When it goes 1 rupee, 2 rupees just against you, the fear will start working out. Immediately you will book a loss because you have added a huge quantity. There what happens? 1 rupee movement, 1000 rupees loss, 2 rupee movement, 2000 rupees loss. It will never recover again. Your loss will build up higher and higher high. So what happens? The fear will make you to exit quickly, and loss will start building up. Again next you will make another higher lot, 2000 quantity, to cover the previous loss. It will make the fear will come in, and you will end up with a huge loss. So do not fight to recover the losses, and do not try to average your losses. when market is falling, do not try to average the losing position. That is why people say do not try to catch the falling knife. When you try to catch the falling knife, it will hurt your hand or prick your hand. So do not try to catch the falling knife. When market is falling due to some reason, it is falling. Some institutional player are selling their position, so that market is falling down. So do not average. You will think your average is coming down, but you don't know that slow you are losing the whole capital from your account. So do not try to do in a rapid loss recovery. Today you book 1,000 rupees loss. Please quit from the trade and go tomorrow with fresh mind. So we'll go to a point number 5. To become a successful in day trading, you should know the money management and risk reward. This is one of the important for all the traders. Either they are beginner, have good experience, they should know the money management and risk reward. Without knowing the money management risk reward, you cannot become a successful in day trading and also in positional trading too. You cannot work in the market itself, in the stock market itself. So money management and risk reward is most important to be in the market. I'll give some example on the money management. What is money management? So if you are having a 1 lakh rupees of amount with you, you should not use more than 10% of your capital for a trading. So in that 10% of capital, you should not take more than 1 to 2% of risk on that. From your capital, it might be 0.2%. So risking your capital should not go more than 1%. Okay. So what is risk reward in this money management? Risk reward is nothing but when you are taking a trade, you should define your risk. What should be your risk? You should define your reward. So what should be a risk reward? Normally 1 is to 2 risk reward would be a very good. 1 is to 1 risk reward also okay, but based on your winning ratio. It will decide based on your winning ratio. Example, I'll take if your winning ratio is 50-50. If you take 100 test trade, your winning ratio is 50%. Then if you are 1 is to 1 risk reward, you will end up with no loss, no profit, only paying a brokerage. So if your risk reward is 1 is to 2, then you will end up with a 25% profit in the month end. So better to have a risk reward of 1 is to 2, and if your trade goes 50 wrong trade and 50 right trade, you will be in profit in the day end. So I'll just show an example in the chart how to have a risk reward. Here you can see a chart of Nifty. See, this is what I told you in the first point. Chart trading is most important. You can see here it is taking a resistance in this point. This is a CPR and it came down. Again it gone up. Again here it is taking a resistance. The buyer is trying to pull the price up, but they don't have a strength to pull the price up. When the inverted hammer formation happen, the next candle has engulfed this candle, and here the evening star pattern as formation happened. So how to have an 1 is to 2 risk reward, I will show you here. Take in a trade in this position, have a stop loss just above this CPR, giving some room. So when you take a trade here, your stop loss is here. So example, I'll tell you, when you take a trade, it is 10,085. Your stop loss would be somewhere around 10,096. So it is around 11 points would be your stop loss. So what is your target? Target should be the support point. So where is your support? 10,053 is your support. So your risk reward is around 1 is to 3 here. So you should book your profit here. Do not think the market further will fall. You book your profit from and exit from your position. This is how you need to trade in the market with the risk reward. I may be making another video on how to trade with support and resistance, that I will teach you very good strategy that. So here also you can see one trade when market started falling down, and it took a retracement. This is a retracement, not reversal. This is a retracement. So here you can see there is undecisionness in the buyer. They cannot break this resistance. When the support became a resistance, it is a negative only. You should look for a selling opportunity. How to look for a selling opportunity? You can see here undecisionness candle continuously. When the inverted long wick candle formed here, you can see hammer type, the engulf is happened, and you can see how strongly it got fall. So here you initiate your trade, put your stop loss here, put your stop loss above the resistance, keeping some room, and target should be the next support. So here you can see almost 1 is to 2.1 is to 3 risk reward. So this is how you need to trade within a risk reward. So if you trade in this type of risk reward, so you can be in profitable trade in intraday trading. Without stop loss, you should not initiate a trade. That is the rule of intraday trading. So dear friends, I think you have enjoyed this video. If it helped you, please share this video to your trading friends. Thank you friends. Thank you. See you again with a new video.